Mortgage protection insurance sales. What kind of money can you make as a mortgage protection insurance agent? Let's talk about it. Greetings and salutations. It's David Duford, owner of Duford Insurance Group, where I train and recruit agents nationally to sell things like final expense and Medicare, both face-to-face and over the phone. Thank you so much for watching. So the purpose of this video is to give you an overview of what kind of income you can make, the numbers behind the mortgage protection insurance business. The idea behind this is to really give you a perspective of what's necessary in order to make a great income selling mortgage protection insurance. So if you are an aspiring insurance agent looking at mortgage protection, a lot of organizations offer it. Or if you're looking to possibly move from one insurance line to mortgage protection and you're wondering what the potentials are, this video is going to do a good job to explain all the important components so you can decide if the opportunity of mortgage protection insurance is really up your alley. So let's get started. So in any business model insurance sales, there's three important components. You got revenue, expenses, and your net income. Revenue, of course, is basically your commissions earned on each sale. Your expenses are the costs to acquire that revenue, chiefly among them your lead cost. And then the net income is what's left over before you account for things like taxes and whatever else. So we're going to first talk about revenue and how do you source your sources of revenue in the mortgage protection business. So mortgage protection predominantly involves selling term life insurance, typically non-medical term that doesn't require an examination. You simply fill out the application, either get an instant decision at the point of sale or take a couple of days or weeks to arrive at a decision. Typically, the way mortgage protection works is you make a sale and then you get a percentage of the annual premium. That's basically the collection of monthly premiums for the year, rough estimate. That is whatever your percentage is, that is the commission that you earn. Now that percentage can vary wildly. There are some MLM Kool-Aid drinking organizations that will start you at 25, 35, 55% commissions. There are others that aren't so drunk on the Kool-Aid that'll start you a little bit higher. And there are independent agencies that will even get you started at 100% plus commission on non-medical term products most appropriately sold for mortgage protection insurance prospects. So I mention that because it's important to consider that your commission percentage is a huge driver to your ability to make money, right? The lower it is, the lower margins you have, especially when we start talking about the cost of doing business. While the higher it is, the more net income that you're going to make and the more lucrative this business model is. So as a side note, whenever you're looking at any mortgage protection insurance sales opportunity, question what the insurance commission is. Make sure it's fair. Make sure it's maximized. Don't accept a low commission rate because it's an MLM and you get to recruit people. That's not good enough. You are probably wanting to sell insurance successfully, not necessarily recruit, hopefully. So you need to make sure that commission level is commensurate with your ability to have a lucrative opportunity selling mortgage protection insurance. So that's how the commission dollars work itself. There's a couple other variables to be considered. We have what's called persistency or the quality of business. This is the amount of business that you write that as a percentage is still on the books after 13 months. The first year persistency as it's known. With mortgage protection, you're looking at probably a 90% give or take persistency. Of course, it's a huge variable. If you're a pushy salesman and you're very antagonistic and aggressive, it's probably going to be lower. So make sure you account that into fact. Also, the question sometimes comes around renewals. Well, a lot of these insurance products for term mortgage protection insurance don't offer renewals. Now, if you sell some kind of whole life product, which sometimes you will, there will be some kind of renewals like 3 to 5 to 7%. It just depends on the product that you're selling. But in most cases, selling mortgage protection insurance with non-medical term insurance, you're not going to have any kind of renewals whatsoever. So it's money that you're always going to have to go sell something in order to earn. However, the good news is there are other multiple opportunities for product sales that you may make as you advance as a mortgage protection insurance agent. For example, you can sell annuities to your older clientele that want guaranteed return on their capital without the risk of loss due to down markets. And then also index universal life for the younger clientele that, again, want to invest and save for retirement, but don't want to go through the downs of a bad market. Point is you're going to have a lot of opportunities other than medical term insurance to sell to mortgage protection insurance prospects. And as you get better, these other type of product sales opportunities are going to pop up all over the place and be another great way to make other sales that end up being a lot bigger in size and premium than your standard mortgage protection life insurance deal. So now let's talk about expenses. So there's a primary driver to all insurance sales businesses that use leads, and that is direct mail expenses or any kind of lead purchases. You see, mortgage protection is not a cold calling business. You're going to have to buy some kind of leads in order to stay busy. And the price for mortgage protection leads are pretty pricey. I've seen mortgage protection leads as low as $40 a lead for a fresh lead and up to $70 a lead for a fresh lead. Why does this vary widely? Because some of these organizations will subsidize the leads for you, or you get a really low commission in order to get a lower price point on your mortgage protection leads. And there's a lot of variation there, but it just depends on kind of the organization you're joining, what the value proposition is, and kind of where things stand. Either way, mortgage protection leads are pretty expensive, but on the flip side, they're very good quality. They're people who just bought a home. They're very interested in life insurance to protect this obligation they now owe money on if they die in order to keep it in the family. So the price many times is definitely worth the investment. Some organizations also have aged mortgage protection leads, a lot of them do actually, that are much, much less expensive than the ones I've described. And they're a great way for some agents to get started just on some kind of lead generation strategy to practice their script, get up and running before they can get on that fresh weekly lead flow of direct mail leads. There are some other factors to consider for expenses. For example, full-time mortgage protection agents who are working fresh leads most likely are working multiple cities. They're working evenings. So many of them will travel out of their home city and into other surrounding cities. So a lot of the time, a lot of mortgage protection full-time agents are full-time, working evening hours, staying the night over in a hotel for multiple days a week before coming home at the end of the week. So you do have to factor that cost of travel expense, more so than other lines of business like final expense or Medicare, simply because mortgage protection leads, especially the fresh ones, are much harder to come by than the aged ones. Thus, it requires a lot of travel in order to work effectively. So what is the net income potential for a mortgage protection insurance agent? Bottom line, it all comes down, of course, to what your capabilities are. I do believe that it is possible for mortgage protection insurance agents to net an income well above $100,000 a year. I am sure that some of the best agents are doing more than $250,000 a year in net income after expenses. There's a ton of opportunity in the mortgage protection insurance as long as you're comfortable with the travel required for most agents, as long as you're comfortable with the hours, working mostly dinner hours. It's a great business model that very well works, especially in strong economies, not so much in weaker economies, as proven with the last recession we went through in the early aughts. It is something that tends to be a bit economic, but otherwise is a great opportunity if you are in a good market where things are going very, very well. I hope you enjoyed this video on how selling mortgage protection works and what the numbers are behind it to see what is possible. If you have any comments or suggestions, please leave them below. If you like the video, thumbs it up, subscribe if you haven't already. And thank you so much for watching, guys. My name is David Duford at Duford Insurance Group. See you next time. Bye.